What's up everyone, it's Karthik with Moneyvest. The Dow Jones hitting a brand new all-time high with the S&P 500 and the Nasdaq also closing in on a positive week here after of course selling off almost 2% last week. The S&P 500 was up a little bit over 1%. My options portfolio hitting a brand new all-time high on the back of course Nvidia earnings and Tesla here that continues to hit almost near 52-week highs here. So we got lots to break down. We got 25 more days left until the next Federal Reserve meeting. With the summary of economic projections, we've got a new round of economic data that's right around the corner with inflation numbers, unemployment numbers. Everything is scheduled to come out here in very short period of time, so just a few weeks here. And of course, we've got our very own Moneyvest meetup coming up on Sunday, this Sunday on November 24th. So I'm super excited about meeting everybody over in Tampa as well. So this right here was the state of the market. The Dow Jones here up almost 1%. So there was a lot of rotation out of tech over to the Dow Jones, Dow and more value-oriented stocks. We did have, of course, discretionaries and even staples and energy and financials doing really well on the day. The S&P 500 just shy of 6,000 points, and the Nasdaq once again crossing over 19,000 points here. This right here was my SOXL puts. $26 puts expiring pretty much close to 97% profit. Had I let them expire all the way out, it would have been 100% profit, but it's only 3%. We killed it, absolutely crushing it in the options portfolio. 97% profit, over $248. And I opened 4 new ones that I sent out the alert for and that are already up 22% here. And the other $28 puts expiring in December are also close to 41%. All in all, up over 38% on these 2 options positions. So again, if you want to get access to the pretty much entire options portfolio, links is going to be down below. There's going to be a 16% annual discount available until the end of this month here. So at the end of November, that 16% annual discount goes away. And you can see that we have been having a little bit more red weeks recently, but nonetheless, we are progressing in the right direction. And week number 13 is officially over, and the options portfolio is sitting at just over $111,503. I will be sending out the update over on Patreon for all the members, so you can pretty much see that. So this right here is where I post. This was week number 12. Week number 13 is going to be coming out very soon. But this week was also one of the stronger weeks here, up over $2,000, and the cumulative net P&L now sits at $9,200, and the total return just dead on at 9% since we started tracking this portfolio 13 weeks ago. On a year-to-date basis, though, this portfolio is up a little bit over 31.7%, which against the S&P 500's just under 26%. We're doing pretty well. We just got about 6 more weeks left to close out the year, and I'm very confident that this year is also going to be pretty solid compared to the S&P 500. Last year was 26% against S&P's 24%. This year, I am just 6 percentage points higher than the S&P in the options portfolio with a lot less volatility. So we're looking at a 0.35 beta, which of course is a lot less in terms of volatility. So again, if you want to get access to all of that, link's going to be down below. You can join our Discord, join our Patreon, and as I said, there's going to be some down weeks, right? So every trader, every investor will tell you that there's no 100% winning in this game. You're going to have some weeks which are going to be down weeks, but as long as you're progressing and moving in the right direction, right? As long as that line is going towards the top right, that's a good sign. And that's exactly what we've seen here. Pretty much go back, track all the weekly updates. You can see there's some weeks which I'm obviously not doing as well, but then of course the overall trend is moving to the upside. So we're hitting a new record high here, 9% total return, and cumulative gains now sitting at well over 9,200. So I'd love to have you on board. I think this is one of the greatest gifts in the market is trading options. And so the more you learn about it, the more you're able to run the wheel strategies, sell them, the better it's going to be over time, right? The more efficient you're going to become, the more optimized your trades are going to be. So the Federal Reserve meeting coming up in 25 days. Of course, we'll be trading around that meeting as well. Summary of economic projections are also scheduled to be released in the December meeting. And right now, the odds are very split. We're still on the fence here, whether we're going to get a rate cut or not. Still a majority, 52% of investors, based on the interest rate predictions here, expecting for a 25 basis point rate cut. However, 47%, which is still a significant percentage of investors, expecting for a no change in the Federal Reserve policy. Now, the Federal Reserve actually did a survey earlier where they found out that the fiscal deficit or the fiscal, the burdening deficits and the national debt is now becoming a major concern among investors as opposed to inflation reaccelerating. So earlier it was inflation, potentially starting to move back up. That was one of the biggest concerns that investors had going into 2025. And now that has shifted more towards the fiscal deficit side of things, the treasuries, as well as the national debt, which is obviously causing the yields to move back higher ever since Donald Trump has been elected. Now that's a fair concern. As I mentioned before, if there is not going to be any type of efficiency in the government spending, then we're going to see a lot of deficits. Deficits could potentially increase significantly, which could result in the national debt going up, which could result in more money printing, which could result in an oversupply of bonds, more issuances that leads to lower prices, which leads to higher yields that overall causes a big problem in the US economy and of course the equity markets as well. Now that would be the chain of thought, that would be the chronological order of how things may happen. But again, we still have to wait and see if that happens or not. We also have DOGE, which is the Department of Government Efficiency. If they're going to lay people off in Washington, if they're going to be more efficient in how they spend those tax dollars, there's a lot of variables at play. But right now, the bond market's been very clear in our understanding that when Donald Trump got elected, of course, we've seen the significant spike in the 10-year treasuries coming in since the third or fourth week of September. Of course, the 10-year treasuries have gone up from 3.6 to 4.5%. So that's about an 85 basis point increase in the 10-year treasuries. Starting to roll over a little bit, but again, this is going to be this constant area of focus for investors and for the market. If the 10-year treasuries continue to move up, it's not going to be great news for tech. As you can see, technology didn't really do well, basically flat on the day. The bond market also very, very flat. We had energy slightly up 15 basis points, but really the sectors that are moving up and that are doing well are financials, right? Financials continue to perform a lot better on the back of a higher interest rate environment because of their expanding net interest margin. So how much interest they can charge on a lot of their loan products continues to make a lot of profit, a lot of money for them. Industrials and discretionaries also pushing up. Discretionaries thanks to Tesla. Tesla actually had a pretty decent day, along with Palantir, which was up a little bit over 4.87%, hitting a brand new, actually not a 52-week high, but getting closer to all-time highs of just under $66 per share here. And of course, we had SoFi also absolutely crushing it. In fact, it was actually higher, $15.66, so a little bit shy of $16 per share. And of course, Tesla was also leading the charge here, up over 3.8, almost 4%. So if you come over to market concentration, you'll notice some of the bigger gainers on the day. Tesla leading the way, $45 billion inflows. Microsoft, $30 billion. Apple, $20 billion. And everything else was mostly related to financials or retail. Home Depot, JP Morgan, Walmart, AbbVie, Procter & Gamble. Palantir was also making that list, up almost 5%, up over $7.3 billion. And some of the big losers on the day, of course, Nvidia, seeing significant amount of outflows. And despite that, the portfolio, the options portfolio, which has over 600 shares of Nvidia, still hit a new all-time high. Why? Because that's how it works. That's why we sell calls to hedge for this downside, right? That's the beauty of trading options the right way, is that if the stock actually does decline, you're able to hedge your positions by selling calls and collect that premium. And that's why my Nvidia calls were actually higher this week. The underlying position did come down, but nonetheless, pretty decent week here for the entire market. Google was down. Amazon on the day was also lower. Meta was down about 70 basis points. But nonetheless, pretty strong week here. This was the Federal Reserve survey that I was talking about, as inflation fading as a risk is next. The risk next for the U.S. economy is, of course, debt and trade wars as well. So concerns over the U.S. fiscal debt sustainability was a top-cited risk. It was noted that increased treasury issuance could begin to crowd out private investment or constrain policy responses in an economic downturn. And these concerns have also been reflected in the recent bond market behavior, with the yields on the 10-year treasury notes, for instance, rising sharply over the last 2 months, despite the Fed having to cut its benchmark lending rate twice by a total of 75 basis points. So this is exactly what I just mentioned. And over the course of next, let's say, a couple years or maybe even 4 years, we're going to have to really pay close attention to how the 10-year treasury essentially trades, because it really comes down to what the 10-year treasuries are doing. A lot of people kind of disregard the 10-year treasuries, but it's the proxy against which almost all lending rates are measured, and also the opportunity cost is measured, right? The investors globally are only going to invest in equities as long as they're getting a premium for investing in equities. If the 10-year treasuries is giving them 5, maybe 6, 7, 8, 9, 10%, there is no more a premium to investing in equities. So that's why the 10-year treasury is what drives this market behavior. In all terms, all else equal, if the 10-year treasuries is going to be higher than the dividend yield or the earnings yield or the projected earnings yield of the S&P 500, investors are going to flight to safety, flight to quality towards the 10-year treasury bond, right? So that is just something that we have to keep in mind and we'll continue to monitor. So looking at the day, portfolio was up a little bit over 8,400 thanks to Tesla, thanks to Palantir, thanks to a few other companies here, but pretty solid day here. And again, coming over to the Moneyvest index, we're sitting at just a little bit over 3.77. So we're still in the optimistic zone. We haven't really come down to a neutral or even down to uncertainty or fear in a really long time. In fact, all of 2024, we haven't seen any uncertainty in the market. It's been a very, very strong year. And you can see that, the last few times we just kind of came down to that uncertainty was back in August. So August 5th, the blow up due to the carry trade came down to 3.04. And of course, prior to that was back in April. So those are the only two serious buying opportunities, in my opinion, from the market. 2023, there was a lot of triggers, a lot of buying opportunities, plenty of really high quality, serious buying opportunities to deploy capital. A few times in March. Then we also had a couple times in May. We got August in there. We got October 23. We got a little bit towards the end of October 23. So all in all, a lot of really solid buying opportunities. But 2024, there's been a significant lack of those serious buying opportunities. It goes to show how strong this market has been. All these earnings are out. I think John Deere did really well, up over 8% yesterday, despite the miss in revenue, beat on EPS. And Elite Investors is also going to get updated because of the new 13F filings that came out from a lot of these hedge funds and institutional investors as well. So coming over to volatility, back down a little bit over 9.6%, trading down to 15, as this past week was very, very strong. Crude oil prices are trading back above $71 a barrel, coming up to that resistance again, closer to 72. And not to mention Bitcoin absolutely charging up. IBIT is now hitting another all-time high, up 1% to 56.49. Not to mention Bitcoin here, Bitcoin USD sitting at well over $98,800. All-time high sits at 99.8 on the dot, just shy of $100,000. That's a huge milestone. It's a huge six-figure milestone for Bitcoin. So I think everyone's just kind of waiting for that to happen. Could happen over the weekend, could happen next week. But we all know that it's coming, right? It's only a matter of time until Bitcoin gets to that $100,000 level. So congratulations to everyone, all investors, traders in crypto. You guys have waited a long time, and it's finally here. And of course, IBIT. I prefer the ETF route, which also has done, of course, really well. Doubled in the last couple months here since August up until now. It's up over 100%. Okay, so coming over to the market. So S&P 500 first. Continues to move up. So this week was, like I said, very strong. If you come over the weekly gain, up over 1.6% after, of course, a 2% sell-off last week. The target remains at 6,000. So that's going to be the level to keep in mind. So that's going to be that target right there. Support level 58.67 down to 57.65, down to 56.70 for S&P. And of course, coming over to the NASDAQ here, a little bit of consolidation. Support level 18.6, resistance up to 19.3. Again, on the week here, the NASDAQ also pushing up 1.7%. A little bit of that underperformance compared to the S&P. And of course, the Dow Jones hitting a brand new, almost an all-time high. Not an all-time high yet, but a close to it. And this week was up over 1.9, almost 2%. So outperforming the NASDAQ here. Goes to show that we did see a lot of liquidity flooding into some of the more non-tech stocks here, right? So Nike, JP Morgan, Microsoft also. A little bit more in the financials. JP Morgan, like I said, have done really well this past week. If you take a look at XLF, for example, this past week here, XLF's performance was up 1.7% versus XLK, which was up actually 2%, 2.14%. And then if you take a look at XLU, utilities were also up 2.7. So utilities actually doing a little bit better than technology and even financials. And if you take a look at discretionary, because Tesla had a pretty strong week, we were up over 2% on discretionaries as well. Now coming over to individual stocks, starting with Apple here. Again, nothing really changes a whole lot for a lot of these Magnificent 7 big tech companies because there's not a lot of movement. There is a lot of consolidation. And right now for Apple, we've got a range within which it's been trading. Resistance 237, support at 214. Coming over to Amazon, Again, very, very identical to Apple here, getting rejected at that resistance here, coming back down to that area of support and that demand in the 190s. So back in the low 200s here for Amazon, we got a lot of support and a lot of demand sitting right there for Amazon. Now, a Tesla specific video is going to be coming out very soon. Tesla hitting a brand new 52-week high at 361. That was the brand new 52-week high. We talked about a little bit of that pullback here after being incredibly overbought. And of course, now we're starting to see that momentum back up over 350s. And that next resistance and targets pretty much in the 380s right now. And Tesla is now, if you come over to Market Snapshot, is in a correction. Folks, we are now in a correction. We're less than 15% away from all-time highs. I mean, Tesla has come a really long way. I mean, a huge congratulations to Tesla shareholders and investors as well. It's been long overdue. And you can see like Tesla's back in the correction territory after such a long time. So it's kind of nice to see that it's only 15% away from its all-time highs after waiting for over 3 years. So next target and resistance is going to be in the 380s. I will try to do a video on Tesla over the weekend. However, no promises. We got our Moneyvest meetup coming up this Sunday in Tampa, so super excited about that. Maybe we'll do a live stream. From Tampa, Florida, when we're all meeting together. So going over to NVIDIA stock here. Now, NVIDIA, of course, had a rough week. It was down, basically flat, but in the last couple of days, it has, of course, been very, very volatile. On the day, down over 3.2%, selling off over $100 billion. Resistance is going to stay up at 150, support down to 133 for NVIDIA moving forward, down to as low as inside this green rectangle in the low 100s. So right now, as you guys already know, 125 call strike is what I have with about a cost basis of 107. So I'm deep in the money right now. So I'm completely fine with the entire situation. If NVIDIA explodes to the upside, I will roll those contracts out further to unlock more capital gains. If NVIDIA sells off, it doesn't really change my position at all. Like I'm already capped beyond 125. So it's not going to do anything to my notional value that I have for NVIDIA. So in a pretty good spot right now, I would say. Advanced Micro Devices coming down to that support here once again inside this green rectangle in the 130s. Resistance going to stay put in the 150s right now. Coming over to Meta Platforms. And Meta here also just consolidating sideways. 540 is going to be that support. $600 resistance. We're still in the context of a little bit of an uptrend. Another support is going to be down in the 490s. Coming over to Microsoft, also a lot of consolidation in that range. Resistance is going to stay put in the 430s. Very strong support is going to be that area of demand, and that's support in the low 400s. Coming over to Google, also selling off after the DOJ report, trading pretty much down to that support here. We did have some buyers stepping in yesterday, but looks like today we did, pretty much trade down to that same level in the 165s. With some buyers starting to come back in, but I wouldn't be surprised if we do see a little bit of a breakdown below this level for Google, potentially retesting down in the 150s again for this company. Coming over to Netflix, is Netflix still hitting an all-time high? So not today, a little bit shy of $900 here, but incredibly overbought. I mean, this is a stock that is just ripe for either selling calls if you got shares to hedge for that downside, or just simply, if you want to hedge, you can also be looking at buying puts. But this is just an incredibly overbought stock at the moment. So trade very carefully on the long side, considering how much it's already rallied. And again, the technicals are just very, very overbought at the moment. Now coming over to PayPal and Visa, those are the two companies that are left, and of course Enphase and Costco. PayPal here on the day continues to move higher, 2.3% on the day. So that's a pretty solid day here, up over 1.1% on the week. Next resistance and target is going to staying put at $89. Support level is going to be staying put at $81, down to as low as $76 for PayPal as well. And then coming over to Visa, consolidating sideways in that range. We got a resistance roughly at around 312. That's the all-time high, and a little bit of that support sitting right about there at $306 per share. And again, we got a little bit of a gap that also needs to be filled for Visa. And finally, we come over to Enphase. Enphase is finally catching some momentum here. Lots of bids starting to step back in, 4.2% higher. It's nice to see that finally there's some buyers stepping in with the RSI crawling back up, the MACD crossing over that signal line, and the L3 banker oscillator also suggesting for some institutional investors or bankers also stepping into that stock here. Support level at $59. Next target and resistance gonna stay put at $73. And then finally we come over to Costco on the day here. Once again, hitting a new all-time high, but a very interesting candle. Lots of sellers stepping into some profit taking in the 970s, so shy of $1,000. And support level now is going to stay put here at 961. down to as low as 919, 920. So that's all I've got for you today. As always, make sure you drop a like and of course subscribe to the channel. Links can be down below if you're interested in joining us and of course getting access to all the members only updates, weekly options portfolios, trade alerts. Sold some puts today as well on SOXL, closed out on a few of them at a 97% profit. So links going to be down below. Of course, you can also pay annually and save 2 months, get 2 free months if you're interested in getting access to that as well. So if you have any questions, let me know. As always, happy investing. I'll see you all in the next video.